Our guest this evening, none other than Saul Friedman and Simeon Friedman, partners at SNF Co. Saul Friedman and Company. They've been one of the leading firms here in the New York area, and they've been open since 1974. Yes, experience does count for more than a little bit, and they are certainly, closing in on a half a century of service, servicing businesses of all types. By the way, just it's primarily small businesses, but without divulging, who is like some of your larger clients? I'm saying this in terms of annual billings, just so people get a sense of your firm.
Our largest client in sales started with us in 1976.
Wow.
He did sales in 76, $2.7 million for the entire year.
Okay.
In 2017, he did $2.9 billion with a B.
Wow.
Dollars.
So they just switched from an M to a B.
So right, and we have many clients that started with us very
That's
small
nice.
and doing hundreds of millions of dollars of business, and they've been with us for the 40-year run.
And by the way, in order to find out more information about your firm, what's the website?
Website is www.snfco.com. That's snfco.com.
Beautiful. Let's jump right in, okay? Trump, established this major tax overhaul in Washington. At the end of the day, it is law, and it became law, as Saul mentioned, within 7 to 10 days after it was passed, which is just this really, it's not possible. I'm stammering because it's just it's mind-boggling to figure out how tax professionals are dealing with this. But somehow it is what it is, and we have to deal with it. Let's jump in. The 20% qualified business income deduction. What is that all about?
The government decided that in any pass-through entity, and we'll explain what a pass-through entity is. Most small businesses work in a pass-through entity. Up until now, the top rate was 39.6% on the federal level. That's the tax rate you paid on income in your business. The government reduced the tax rate for individuals from 39.6 to 37%. However, for small businesses that qualify, the government said that when you report the income, we allow you to chop off or deduct 20% off of that income, which is not taxable. So, for instance, if you had $1 million in profit, where up until now you paid 39.6 on the $1 million, now you're going to pay 37% only on $800,000 because we're giving you an exemption of 20%, which is $200,000. That means that the effective tax rate for businesses is 29.6%, which is a reduction of 10% off the top. And in small businesses, that is a lot of money to the pockets of the shareholders.
Sure. Now, explain pass-through entities, please.
I'll explain that.
Okay.
Pass-through entities they're different structures, legal structures, and what the entities are. For instance, it could be a corporation that has elected by the IRS to be treated as what's called a subchapter S corporation, which the corporation then does not have any tax burden on the entity level, and instead the income flows through to the shareholders, and they pick up that income on their personal taxes. Similar to that, you have an LLC, which is another entity that flows through to the individuals. Again, the LLC on its own doesn't have any tax. You have partnerships, and then you have an entity that is not an entity. You have what's called a sole proprietorship or a sole practitioner that files their business income on their directly on their personal tax return, and they don't file a separate entity for that. So small business would be either an S corporation, an LLC, which, as I said, the income flows through to them personally, and then the individuals that report their business income on their personal tax returns, that would also be considered a small business, where potentially the 20% deduction or exemption of their income can be applied.
So now, just to come back to again the 20% qualified business income deduction, which entities are eligible for this deduction?
To clarify, when you say entities that are eligible, the entities actually don't have the deductions. The entities report the income, and that income flows through to the individuals. Either if it's an S corp to the shareholders, if it's an LLC or a partnership to the partners or members within the LLC. Once they get the flow through via Schedule K1 and they pick up the income on their personal tax return, there will be a provision to report that income and to apply the 20% deduction off that, providing that it is they're qualified to take that deduction. But assuming that they are qualified, it would be done on the individual tax level.
I love the honor of interviewing C-level executives and sharing their great advice and perspective on Mind Your Business. I'd love to get your feedback. Post it in the comments below and subscribe. You'll never miss an edition of Mind Your Business.